Welcome back, guys. Harry here, known as Tradesharpe, and in today's video we're going to talk about a very popular question that I get asked a lot, been getting asked on stream, and I want to cover this topic because I think it's an important topic and I see there's a lot of opinions about this online, which is going to be talking about trading in December. Should you trade? Should you not trade? Are you going to lose money or are you going to make money? What is the popular opinion? Well, if we look over the world of YouTube, we can see that the popular opinion is don't trade in December. It's a bad idea. You're going to see so much inconsistency. You're going to lose trades. When in reality, I don't want to speak based on an opinion. I want to speak based on experience. So what have I noticed in December? How do I approach December? And that is exactly what I'm going to talk about in this video. So we're going to talk about the nitty-picky and exactly how you're going to trade December to make sure to maximize your gains going into the end of the year and not mess yourself up. So definitely advise you to watch the end of this video. There's going to be a lot of nuggets in this video, a lot of good points that I hope you guys take into consideration when trading this month. So don't go wrong, don't make the mistakes. So that being said, let's get straight into video and discuss how do I approach trading in December. So guys, before we start the video, as usual, you know the drill. If we can do the YouTube business, leaving a like on this video definitely keeps me motivated to pushing content. Reading the comments, I love to read the comments, whether it's your opinion, whether it's your feedback, whether it's a positive comment or just support. So drop those comments there. I do appreciate that. You can get the likes on this video up to 500 will do. I'll be happy with that. But if you're new to the channel, be sure to leave a subscribe. Definitely helps support the channel and gets this content out to more people so they can hopefully benefit. And yeah, if you join one of the groups down below in terms of my free Discord and all of that stuff, someone DMs you, not me, only my official links are only in the description below. So you can check out my Instagram and all of that. That's my official links to my exclusive group, all of that. And yeah, so you can check that out in the description. Anyone sending you a link, it's not me. So all of that out the way, let's get into the video. So the first point I want to talk about trading in December is why is it said, what's the fundamental reason behind December being a month that is bad to trade? Well, essentially the whole idea behind it is that as we come towards the end of the year, portfolio managers, hedge fund managers, they are trying to wrap up their commissions. Most of these managers are commission based. They get commissions based off profits and they want to wrap up those commissions. So we see two things. We either see rebalancing of portfolios, so they start to consolidate their portfolios, start to consolidate their positions going into next year to start the new year. And we see spurts of volatility in the market from positions closing, from rebalancing, from the hedge fund managers trying to wrap up their end of year profits or commissions, right? So that is why December can be a little bit more inconsistent, but that doesn't mean that isn't moves. And this is where price action trading beats everything, because you just trade what's in front of you. If there's volume, if there's movement, there'll be a way to take a trade. And if there isn't a way to get in that move, then you haven't missed anything because it doesn't follow your plan. And long term, that plan keeps you safe. So both ways, you don't miss out on anything and you don't end up trying to catch those moves and get stuck. So the second thing is, once we see all of that, we start to see traders leave the market. We start to see positions start to close off. And then we start to get inconsistency of volume, and we might get inconsistency of movement just from the lack of traders and the lack of people being in the market. So this is very common to see, and this is something that we might notice in December, which is why people say there is more inconsistency. Doesn't mean you can't trade it. It's still tradable. Your setups will still work. You just need to be able to identify when is good opportunity and when is a bad opportunity. And it's very easy to identify that because good opportunities will follow your rules and bad opportunities won't. If you see price in a range, don't think, let me try scalp this range. No, just leave it. You don't need to force anything in December, right? And if you're unsure, the best option is to walk away. If you're ever unsure and say, I don't know, and this can put me in a bad position for the month, then just leave it. Don't put yourself in that position. If you have the option, why would you do that? Whereas if you have a plan that feels like, okay, this is good, we've seen good movement at this time every single day, then take the option. December will be the same in terms of that. So don't be put off by that and make sure to follow the plan. Now, the big key takeaway in terms of a market dynamic shift, which is two big takeaways that you guys have to listen to and is very, very important here, is that don't get used to the way price is moving in December and start trading that. So you might be profitable in December and trading that and getting used to that, but when February, March, April comes in and you start seeing price move maybe heavier, or you're seeing how price normally moves, make sure that you understand that and can shift to the new dynamics and not be stuck in being used to trading in December. And that's a big thing that traders need to get used to, is being able to shift to different market dynamics. Each month moves slightly differently. Sometimes in the summer months, 12, 14 pips per session is all you can get. Other months, you'll need to use bigger stop losses, 30 pips stop, maybe 20 pips stop, but your target 50, 60, 70 pips, right? So understanding that and not saying, oh, my stop loss is 25 pips here, I'm not going to take the trade because I'm used to seeing 14 pips moves. No, if you have a target, if you have room to move 60 pips to your next target, then no, it still makes sense. It's just numbers have changed because volume is bigger. So make sure to understand, don't get used to that. And that's the best time in end of December coming into January. That's a great time to implement what? Backtesting, right? While you're trading December, if you feel like you don't want to force trades, go and spend time backtesting, right? Backtest the months, prepare yourself for next year. It's a really good trait, and it's something that I have done personally myself that really helps, and it just keeps you on top of your game. So use that. In the description below as well, you can use any backtesting software, but I'm gonna shill my own, of course. We do have a backtesting software that I'm super proud of, and you can try 1 month of that for free. So don't need to even pay anything. Just go try it for free and practice. You can practice 1 month, and we have put March for you. So put a typically high volume month, so you can go and backtest 1 month for free. So that link is in the description. It's called Pip Labs. You guys can enjoy that. So that's one way to utilize your time, right? The second thing here, which I want to talk about December, is this is more of a psychological part of December, which is very important. If we look at 1 year as a cycle, right, we need to understand that's all it is. It's a cycle. It's a date. Time is an arbitrary concept. It is something that we have made. It is not real. There's no real thing saying, okay, at the end of the year, you have to be at X, Y, Z. No, that's not true. It's an ever-going cycle, right? You're going to run these cycles again and again and again. And that's why I always say, if you go back in my videos, you'll hear me say, you have to experience one full market cycle. So restarting in January, you don't have to do some fireworks in December or do anything crazy in December. You can just continue in January. It's as simple as that. It's no more complicated. So understand that. Secondly, don't use January as a month to make back all of your mistakes you did in previous months. Don't use January to try if you're in profits and you're happy with those profits, or maybe you're not. Maybe you made $1,000 on $1,000 account over the year and you're like, I really want to push this, and then you go blow it all. Don't use December as that. That's not what December is for. December is not for pushing. You should have been doing that before. You should already be preparing for next year. And the way you're going to prepare is you're going to set yourself up by finishing December off strong, right? Finish it off consistent. Just take your moves, chill down, preserve capital, right? December is a month of preservation that you can use into going into next year. No matter if you're break even on your account or you've made mistakes on your account and you're slightly in negative, if you're going to keep making those mistakes, this month's not going to help. So you have to amend those, spend time fixing those mistakes, and it's an ever-going cycle, right? You'll soon get out of it and you'll start to improve. Which leads me on to my last point, probably wrap it up after this point, which is at the end of the day, look how far you've come, right? If you haven't made any progression in a year, you are doing something wrong. It's impossible for you not to make progression. You either keep changing strategy, you're not sticking to one thing, you're not being disciplined, but understand there's been huge progression and that progression should continue. So at some point, right, if you do something long enough, you're going to get a skill. So understand that, and understand that is very, very important. So if you keep doing the right thing again and again over time and improving, at some point you're going to reach a place better than you were before, right? Because it's simple, you're looking to improve. So just because, you made 5% in the last 2 months, understand at the beginning of the year, you were losing 5% every 2 days. Look at that progression. That's huge progression. Then your next goal is next. But understand, don't go put yourself in a tough position, lose your confidence in December because you're trying to trade stuff that, when the market's not ready, right? That's the only difference. Otherwise, approach the market exactly the same. Wait for your setups, wait for your options, just be in a bit more capital preservation mode. That's the personal way, and that's it. But the last point I'm going to say so yes, camera looks slightly different, got cut off with my other camera. So to finish off the point here and to make this clear, the last point is if you're a trader who's been trading over a certain amount of time, or especially the whole year, it's good to take a break. And you have to learn to take a break. Because if you guys are not taking a break in your trading, you have an addiction. If you can't not look at the chart for a week because you feel FOMO, you feel like you're missing moves, you have an addiction. And this is going to eat you up, because if you take losses, guess what's going to happen? You're going to feel the urge to revenge, because revenge comes from the act of FOMO and missing out on moves. So if you don't have the discipline to say, I'm going to take times off, there'll be plenty of moves. And you need to get in that mindset that the chart's always moves. There's plenty of opportunities. If you miss it today, you'll have tomorrow and the next day. But if you mess up today, you ruin your tomorrow and your next day because you're trying to chase your mess you made today. So don't be in that zone. Don't do that. That's a bad idea. So have the ability to walk away, take a break, refresh, reset yourself. It's super important. It's important for psychology. Trading is a stressful game no matter what. It's going to come with challenges. And if you haven't experienced any challenges in trading, you will. right? And if you haven't, you're probably not pushing yourself hard enough, because I don't know anyone who has reached any high level of anything without experiencing challenges. So if that's the case, then at the end of the day, it's good to take a small break here, refresh, spend some time you might have lost with family, doing, on your grind, whatever it may be, just refresh, go back to, some sort of normality for a couple of days, and then back into it. That's it. Back into it, right? And then we pick it up, and then we reach the moon in terms of results. And that's the goal. That's how we run it. That's the life of a trader. Trader's an entrepreneurship type deal. Works the same. So that's the video for today. Hope you guys enjoyed. That being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.